Welcome back to Retirement News Online. Well, the longer the time one spends in retirement, the harder it becomes to be certain about a retiree's financial outcome. So in planning for retirement or actually living it, you have to understand the risks that lie ahead and how they can impact your financial security. Joining us is Siler in Longwood, Florida. Lee, thank you for joining us. One strategy for managing risk with investments is diversification. Now talk about what you see with your clients in your practice.
Well, diversification means a lot of things to a lot of different people. And diversification is simply not owning 10 different mutual funds. There is a case to be made, sometimes you're over-diversified, but really diversification means different asset classes. There's a place in a portfolio, especially as you approach retirement, where you need to have assets that are not correlated to the stock market. It may be real estate, it may be currencies, it may be alternative investments, which are investments that are not cash, bonds, or real estate. But that's really true diversification. And keep in mind, when the market is going up, there are some parts of your portfolio that are probably, if you're properly diversified, should be going down. That's what is really the definition of a truly diversified portfolio.
So Lee, as someone gets closer to retirement, how should market risk in a portfolio change?
Well, you hear this all the time, and when you're younger, yes, you can be exposed to the stock market, but as you do get older, you don't want that volatility. What you don't want is you're planning to retire at 65, and all of a sudden the big bear market hits you when you're 64, and now your 401k is 40% less than what it was. So as you get closer to that target date that you say, hey, I want to stop working, I'm done at 65, probably 5 years prior to that, you should be lessening your exposure to those assets that could put you in that really predicament, that bad situation.
We've been talking about market risk. What are some of the other risks retirees need to consider when planning?
Well, you have inflation risk, because especially in healthcare, we may see inflation here in our regular world at 2.5%, but in healthcare it runs at 6%. So when we do our financial plans, we look at that, because healthcare in your retired years is a big part of your portfolio and what you're going to have to pay out. So that's a big risk. You have economic risk, of course. You have recessions that could certainly hurt your growth components to the portfolio. You also have political risk. That could also determine what your taxable situation is going to be. So there's tons of risk in the investment scenario. So that's why you have to look at owning some investments that are not correlated to those areas of the market that could really give you some significant downturns.
That's Siler in Longwood, Florida. Thanks for watching Retirement News Online.